So, ladies and gentlemen, chers amis, cher Augustin, cher Arnaud, it's my pleasure to conclude physically this Europlace International Financial Forum and to congratulate both of you and your team for having overcome all obstacles, and we know how many obstacles there were. Today, Paris is, thanks to you, a financial capital of Europe. And this is more than a short-lived satisfaction. It's a lasting and collective success. The title of today's session, From Crisis to Recovery, reminds us of a quote from Hannah Arendt. Cher Augustin, je sais que tu aimes la philosophie, donc let us quote Hannah Arendt, which is not very often quoted in Europlace. A crisis becomes a disaster only when we respond to it with preformed judgments, that is, with prejudices, unquote. Today, crises are obviously multifaceted, and our duty as policymakers is to prevent them from turning into disasters. To this end, we have to put aside prejudices and come up with concrete solutions. Let me try to do this today in my speech on two short-term challenges. First, Brexit, obviously, and second, the future of Europe's payment. Brexit. It's a burning and unavoidable issue. I will not comment on the UK's domestic politics. I'm perfectly unable to do that, nor on the ongoing negotiations with the EU. But amidst all this deep fog, one thing remains clear. Achieving a fair and well-balanced Brexit deal would be in the economic interest of first and foremost Britain, but also the EU. But even if there is a trade deal, which I do still wish and hope, Britain will have left the single market, and hence things will change significantly for financial services. It means that firms operating under the European passport must anyway quickly finalize their relocation to the EU if they want to operate here as of next January. Let me give you some updated figures as of September. The ACPR, the French supervision body, authorized 43 entities to ensure continuity of activities in France, including 4 credit institutions, 21 investment firms, and 7 third country branches. If we include asset relocations of French groups from their branches in the UK towards Paris, approximately 150 billion euros in assets will have been relocated to France by the end of this year. In addition, there are still 31 entities, mainly investment firms, which have applied for a license in France and whose projects we are currently assessing at ACPR. All these are good news. Let me put it in a nutshell, we are well prepared. But let me bring 2 matters to your attention. First, a handful of small firms, notably in payments, electronic money, and investment, must urgently accelerate the process or risk being caught out in January. Second, concerning European major institutions, the EU will not permit empty shells with only partial relocation of staff or booking arrangements. What has been agreed on with the SSM within the framework of so-called TOM, I don't know if all of you know what TOM are, target operating models, in relation to the relocation of staff and assets has to be implemented at once and in any event before the end of this year. Let me say one word on CCPs. Equivalence decisions by the Commission will ensure continuity of access to UK CCPs after December 2020 until June 2022. Beyond this transition, it is key to address the financial stability risk stemming from an excessive dependence on UK CCPs. And so the 18-month limited equivalence decision aims to give market participants the time needed to reduce their exposure to UK CCPs that are systemically important. This time frame will also be used by ESMA, the European Securities and Market Authorities, to conduct, and they announced it, to conduct a comprehensive review of the systemic importance of UK CCPs to the Union, as foreseen by EMIR 2.2. This will include a fully reasoned assessment whether some of the clearing services are of such substantial systemic importance that the CCP should, for euro-denominated activities, be relocated on the continent. Considering the size and the concentration of some of these clearing services, betting on the status quo would be a losing proposition, including for clearing members. A swift relocation is in the interest of all participants and relies as such on the attractiveness of the clearing offer that EU CCPs are encouraged to build in order to help the emergence of a new liquidity pool. Clearly, Brexit is and will remain bad news, mainly for the United Kingdom, but also for our Europe. Yet, Brexit also represents an opportunity to restructure the European financial system. The euro area starts with some strong assets, an effective monetary euro system, the legal framework for a single financial market, and essential components of a banking union. However, we have a monetary euro system. We do not have yet what I would call a financial euro system with strong pan-European financial institutions and market infrastructure. One word on banks, and it was frequently alluded to in the last days in the press. There is at last a move in favor of banks consolidation in the euro area, which I always supported, including here in Europlace. The ECB fostered this move with its welcome proposal on the recognition of badwills. But beyond domestic consolidations, in some jurisdictions where it is not yet entirely done, we need more cross-border consolidations. It should be part of a real banking union. On other financial activities, let us be clear. There will not be a single city for the continent, but rather an integrated polycentric network of financial centers. Paris is well qualified to become the market hub of this new European constellation. France will be the biggest capital market in the EU on the other side of Brexit. According to a recent study by the British think tank New Financial, Paris will take the lead in the EU in 14 of the 30 sectors studied. Furthermore, this polycentric structure would improve the circulation of the abundant savings in the euro area, a surplus amounting to 360 billion euros last year. Channeling these savings towards financing needs on the continent. And we know that besides euro area businesses have been lacking equity financing for many years now. This capital markets union is even more essential given the prospect of Brexit. European governments all agree in principle on CMU, but so far it remains a blind spot in the recovery strategy. Let us at last turn words into action. Christine Lagarde said it very eloquently in the opening session this afternoon. I come to my second topic about payments. I intended to say that they are not a usual topic for Europlace and distinguished financial forums such as this one, but payments have been mentioned already several times this afternoon. So something has changed. Indeed, payments used to be considered some years ago as technical, back office, and even boring stuff. Let us be honest. But a revolution is underway. And if we Europeans collectively miss it, it would mean a massive disintermediation of banks in the two key assets linked to payments: daily customer relations and personal data. And it would also mean a major loss of sovereignty for Europe. To this day, the coexistence and complementarity of central bank and commercial bank money as settlement assets has structured, so far, the payment landscape. But this structure is being increasingly questioned. The development of cheap and innovative digital payment solutions is leading to a decline of the use of cash in transactions and an increase of cashless payments, which leads to a wider use of commercial banks' money. Besides, our European ecosystem has become critically dependent on non-European players, already major global card schemes, and more tomorrow big techs, be they American or Chinese, with little control for Europe over business continuity and data protection. Meanwhile, the development of crypto assets and so-called stable coins aims to create a new category of settlement assets. Stable coins may compete against both commercial and central bank money, even though they do not offer the same guarantee in terms of credit risk, liquidity, service continuity, and neutrality. I already called, including here in previous years, for a holistic European payments strategy. And here again, dear friends, something has changed in the last month. Something has dramatically changed. The good news is that we made decisive progress in designing this European strategy, thanks to the commitment of the Commission and of the ECB. Christine Lagarde as President, and my friend Fabio Panetta as board member in charge of payments changed the game through their personal involvement. There are three key elements for this strategy: a regulation, an acceleration, and a mobilization. A regulation, a European regulation of stable coins. As drafted by the European Commission, they presented on September 24th, 2 weeks ago, their so-called MiCA, Markets in Crypto Assets, which will be discussed, but which has already two strengths. It rightly speaks of crypto assets and not cryptocurrencies, which is, let me say it bluntly, a very misleading expression. And on substance, The draft MiCA requires a strict and dual supervision by national authorities and EBA to ensure consumer protection and financial stability in a fair and consistent way within the European single market. Second, an acceleration, a European acceleration on CDBC. You are probably now familiar with this acronym, which is our daily bread now, Central Bank Digital Currency. It's not yet a decision, but we published an important draft and an important press release and report at ECB level last Friday. Let me first say that as a principle, central banks need to have an in-depth understanding of innovation and shouldn't be afraid, are not afraid, of to learn by doing. The Banque de France is now engaging with the innovators from the private sector to conduct a program of 8 experiments on wholesale CDBC. We, the ECB and the Eurosystem, need to be ready to issue a money in digital form in case of need. Let me be clear. We cannot allow ourselves to lag behind on CDBC. That may mean that we create, if necessary, a retail CDBC in order to ensure the accessibility of central bank money for the general public, in particular in countries and in circumstances where the use of cash in payments is declining. It may also mean that we decide to issue a wholesale CDBC with the aim of improving the functioning of financial markets and institutions. Within the Eurosystem, the ECB has established a high-level task force, therefore, and just published, as I said, its report. We will now follow a three-tracks approach. A, engage actively in a public consultation from next Monday. B, study with this high-level task force all the regulatory, technical, financial stability issues. And C, start experimentations within NCBs, of which the Banque de France, I do precise it today, intends to be an active contributor, including in retail CDBC. Following this three-track approach towards next year, mid-21, the Eurosystem will decide whether to launch a digital euro project, which would start with an investigation phase. Let me add one thing, which is very important for our fellow citizens. Whatever the decision, it would complement cash, not replace it. The Eurosystem, the Banque de France, will never abandon cash, as it is part of citizens' freedom, of our collective freedom in choosing our means of payments, and hence our citizens' trust in the currency. Third, a European mobilization. This one is on private payments infrastructure. Thanks to the engagement of major European banks, including French ones, in the so-called European Payments Initiative. And again, it has been frequently alluded to this afternoon, which is an important sign. We definitely need to go beyond existing national schemes and offer cross-border solutions and a pan-European brand. EPI needs, obviously, to be detailed, to be opened up to other banks and jurisdictions, and to be accelerated. But EPI definitely warrants the full support of the Eurosystem. And let me stress, because this is a question sometimes asked by bankers, let me stress that there is no contradiction between considering a Euro CDBC, as I said earlier, and supporting EPI. We may probably need both, and we should, in any case, build them to be complementary. My preference would be to seek a public-private partnership for the dissemination of central bank money in a retail form. Possible impacts on the banking sector could be reduced with different tools. Let me give two simple examples. Limiting the quantity of digital euro in circulation and distributing it, if we decide this digital euro, which is not yet done, distributing it through commercial banks. So, the good news is that we now have a consistent European payment strategy. The challenge is that we have to implement it. We have to deliver collectively. And we do not have much time to win the battle. 1 to 2 years, probably. This sense of urgency should lead us all to collective action, and to collective action now. As a conclusion, allow me to say a few words on French banks. They entered the crisis with a sound financial situations, be it in terms of solvency or of liquidity. They provide, and thanks partly to Basel III, if I can use this opportunity to advertise a bit for Basel III. They provided with great efficiency the vital liquidity shield that companies needed during the acute phase of the crisis. On our side, we as supervisors acted with pragmatism by easing some buffers and regulatory constraints. But pragmatism doesn't mean laxity. Strong challenges are still ahead, including risk monitoring, as we are not yet out of the COVID crisis, digitalization, and improved profitability. But that is another story that we might discuss, dear Augustin, together another time. Thank you for your attention.
Thank you very much, Mr. Governor. Thank you, Augustin Romanet, for having chaired this meeting, the annual Paris Europlace International Financial Forum. Thank you to all our participants who are here physically, and a good number of participants physically, but also all our participants by remote. We have checked that more than 600 participants have participated from all around the world by web to our forum this year. I think we had a very complete day, so I will make no more comment on our topics. Europe is back. Paris is in the front, more than ever, ready to welcome international investors. And the next step, post-crisis next step, is to accelerate the sustainable finance. So now we will go to a more pleasant part of this meeting, a cocktail, which is organized for you who are here. And once again, I want to thank everybody. I want to thank our sponsors, and I want to thank also the Paris Europlace team, which has organized this forum for you.
Mesdames, Messieurs, nous vous invitons à vous installer autour des tables pour le cocktail. Des maîtres d'hôtel viendront à votre rencontre pour vous servir rafraîchissement et amuse-bouche. Merci de bien vouloir vous asseoir afin que le cocktail puisse débuter. Nous vous remercions pour votre collaboration. Ladies and gentlemen, we kindly ask you to join the table for the cocktails. The bolters will come to meet you with drinks and appetizers. Please be seated so the cocktail can begin. Thank you for your cooperation.